The world is safe. Bernie Sanders has announced his candidacy for president and raised $6 million. What's up, everybody? Welcome aboard. It is Bubba's Bottom Line, Todd Bubba Horowitz. And this is not my usual Sunday filming, but I'm going to be out of town, so I wanted to make sure I got this done for you. In the meantime, yes, indeed, we have now got a big group of running for the Democratic nomination. And of course, Bernie Sanders, the #1 socialist, announced and didn't make, well, maybe he did make it, $6 million in one day. And of course, now maybe he can add his fourth house to a man who never worked a day in his life. And we can now continue to have our socialist venue as we continue to see the left leaning even farther left. And again, I want to make it clear, I am a fan of neither party, okay? I'm a fan of being in the center. I don't like the whole political system, the way things are going right now. But again, I certainly don't want to end up like Venezuela. I certainly don't want to pay $500 for a roll of toilet paper. I mean, again, you're seeing socialism play out in live time. So why would anybody want that? What happened to regular old capitalism, okay, where you work hard, you make money, and if you come up with something ingenious, you make a lot of money, okay? I mean, can you fault Jeff Bezos or Bill Gates, although Bill Gates wants to pay more taxes? And you know what? Bill Gates and Warren Buffett, all of you guys that want to pay more taxes, there's a simple solution. Write a check, okay? You don't have to bring us into your equation. If you would like to pay more taxes, write a check. Quit mouthing off about how we're not paying enough taxes and simply send the IRS a check. To me, the government doesn't know how to do with money to begin with. I mean, how else could we get $22 trillion in debt? Okay, how else could we be in a position that we now have a big battle with Fannie Mae and Freddie Mac as these stocks are starting to explode? I mean, they're only $2 and $3 stocks. But how could we have such a battle? Now they're talking about privatizing them. How did they get in that trouble to begin with? Okay, how did we get to a position to have a record amount of credit card, student loan, corporate, and who knows what other margin debt, right? How did we get there? I would assume the government has something to do with it all, okay? Again, make the money easy and free. And of course, on Wednesday, the Fed proved the fact that they want to keep the money easy and free because they don't care. Because again, they have their models, okay? And they have no understanding of how a free market society works, okay? I don't quite understand it, but again, I'm not an economist. I don't try to play one, but I do know the model that they're playing is broken. And of course, we will see another meltdown in the markets at some point. Again, we are not predicting it. In fact, we have said repeatedly on this show and on the daily update each and every week that we are long and we are staying long until something changes. Okay. Again, I don't think the markets are in good shape. I think the economy is headed for a recession. Okay. I think, again, we can pretend that it's all okay. And yes, jobs are good, wages are good. But again, what are we going to do with the debt problem? Okay, we can ignore it as long as we choose to. That's your right. Okay, that's everybody's right. But at the end of the day, okay, when is it going to be rectified? Okay, we already know that there's a demand for capital out there. We already know that the interest rate market could go higher. But of course, you've got the Fed continuing to print money and not want to settle back on that $4.5 trillion balance sheet they have. Now, yet you hear the big conversation about during the trade talks that they don't want China to manipulate their currency. Don't we manipulate our currency? Does not the Federal Reserve manipulate the value of the US dollar? Have they not tried to step on it for 6 months, yet it still continues to rise? But are they not trying to control and keep the dollar under control? Of course they are. Because, of course, if the dollar gets too out of control, you hear too many corporations crying and whining, well, the dollar's too strong, we can't sell goods. Well, again, if you'd let the markets be free, all these things would settle out by themselves. There wouldn't be this issue of currency manipulation. Yet central banks around the world continue to try to manipulate their own currency. Okay, for what reason, I could never figure out. But again, I try not to play an economist, but it's certainly certain things are simple, and again, it's beyond me. It's beyond me why anybody cares. If you let asset classes price themselves, okay, what do you end up with? Oh, a free market. I thought that's what we had here. Of course, the markets gets lesser and lesser free with each and every move by the Federal Reserve. Okay, and of course, we continue to let them take charge, and it's like the whole market is waiting for what the Federal Reserve is going to do. Now, isn't it a sad state of affairs that we're all waiting, in this case now, for Chair Powell, okay, and listening to these other Fed officials talk about, well, we should have easier money and we should have lower interest rates and all these other things. So we should continue to freeze out the saver and the older Americans that are trying to get through their retirement and at least live a decent life without having to go back to work because they cannot make any money unless they put it in the stock market. So are we not setting this up for another meltdown? Okay, as we sift through these markets, okay, we look at a lack of volatility. Okay, again, very, very complacent. Once again, we know what dramatic complacency leads to. It leads to a meltdown. Okay, so I think you have to look at it and you have to understand that how did we get into this massive debt bubble? And of course, as I live in the great state of Illinois, geez Louise, I wish I could move from here. Unfortunately, I can't yet, but I'm working on it. Okay. But they're trying to pass a bill, whatever the hell they're trying to do. They're trying to do something to tap into my retirement to help settle their pensions for state employees that they pissed away the pension money. They didn't take care of it. I believe, and I don't know this for a fact today, but at one time it was a fact, that the state of Illinois has not contributed to the teacher's pension since 1999. Okay, so who's managing that money? And I want them to take control of my money. The state of Illinois, the federal government, they're all ridiculous because they don't know how to control money. They know how to spend money. They don't know how to fiscally manage a budget and put together a true plan so that they would be in good shape. If you or I did what the federal government's doing or what some of these states are doing, we would be either in bankruptcy court or jail. Okay? So again, they're going to tap into my IRA to help fund their worthless pension. Believe me, I might have to get a bigger mattress and put the money in a mattress because they're not touching my money. I tell you that much right now. I mean, but we did see this week a couple of interesting stories. You had Walmart earnings, which blew the doors off. But after the initial pop in the stock fell apart and is now lower than it was. So maybe the earnings weren't quite as good as we thought they were. Okay. CVS missed, okay, and the stock got clocked. Okay. So maybe we're not in quite as good a shape as we think we are. Maybe the overall debt is actually taking away from some of the spending. Okay. Maybe the talk of all this Medicare or Medicaid and the massive what do you call that, health plan? No insurance companies. Okay, we have federal health, whatever you call it. Okay, I mean, are we kidding? All right. Again, do I want to be in part of that system? No, I do not. Okay, I do not want to be. We've already got enough socialism in the United States through all of the plans and premiums and entitlements we give to people. I don't want it to become more. I don't see any reason why we need to go into a socialist environment. I think that it's ridiculous. Okay, again, it's going to be close. I mean, again, because of course in our schools, kids are taught that socialism is the right way. Again, this is like a repeat. You know how they say history repeats itself? Well, this could be just another repeat. But I wonder, what's driving these markets. As you look at what's going on, we have had absolutely pathetic volume. Okay, we have had absolutely pathetic volatility. But the bigger story is we've had no price movement. The average true range, as they call it, the price movement, intraday price movement, has been absolutely abominable. It has been no action whatsoever, which is why basically we have said on a daily basis that we are going to say it's better to observe right now than to get overactive in these markets. I think that you have to understand that there are times to fish and there are times to cut bait. And right now it's time to cut bait. Okay, because if you're fishing where you may get eaten by a shark. So I think, again, there's certain times that the markets do not give you the greatest opportunity. Now, again, investors have nothing to do with what I'm talking about now. If you're investing, you just stay in, and when the markets go down, you close your eyes, okay? Or you hedge, because, of course, hedging solves all those problems. But if you're a true investor and you're not going to hedge, then just stay the course, because the market has proved over history that it goes 8% up, up 8% year over year. And if you just stay with good, solid, fundamental companies, okay, that you've bought, then they will eventually rise. And I think that's one of the big issues that many of us forget, and we try to time the market. We allow our emotions to get in the way. In the meantime, we're going to step out here for a break. This is Bubba's Bottom Line. Todd Bubba Horowitz. We'll be right back with more after the break. Hey everyone, I just want to remind you, you've got two choices on my webinars. I've got recordings of the hedging webinar and the futures, which are available to you if you email me at bubba@bubbatrading.com. Or if you want to come live, I'm actually going to do them again. Futures on next Thursday, and hedging on next Saturday again, because I think it's very important. And since these are going to be my last calls until the fall, okay, I want to make sure I give you every opportunity. And I've picked up a new sponsor for the show. If you're in the market for some quality promotional products, okay, my friend, one of my best friends, Joel Foreman, okay, who's with Elite Promotions, he can supply you with anything that needs embroidery, any of the special promotional items, pens, embroidery. If you ever remember the Bubba trading cap I wear, he did those for me. One of my best friends, so certainly if you need some of those promotional products, please hook up with him, and you can reach him at 847-702-8120. Tell him just Bubba sent you, okay? And he'll know, and he'll take care of you on price. That's Elite Promotions, Joey Foreman, 847-702-8120. In the meantime, again, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. We'll be right back with more of Bubba's Line right now. Welcome back, everybody. It is Bubba's Bottom Line. It is Todd Bubba Horowitz, and you'll get this early this week. So either you be happy and surprised, or you say, why is he getting me so early? In the meantime, markets continue to churn, and this listlessness, this lack of any interest in what's going on. Okay. Now again, are we waiting for China? Is that what's going on? Okay, because I still say that China's been priced in to a positive. Okay. Are we waiting for something else? Okay. Is there news? Now, again, you would have thought they might have been waiting for the Fed, and the Fed minutes were dovish and continue to remain the same, but the markets did not overly react. The way I look at it, and I've said this all week through the daily update, is certainly that I think that there's a huge move coming in these markets, let's say 7 to 10%. My personal opinion is it could be lower. I think the odds favor lower, although we are still long. Okay. Again, let's be clear. Okay. As we've said every day for about a month or maybe 6 weeks, we're long. We're staying long. I don't, from a personal opinion and from looking at what I'm seeing, I don't like the market, but I can't fight the algorithms that tell me that the market still has room to go on the upside. So I make this one chance out of 4 we go up and go up 10% from here, or 3 chances out of 4 we go down 10%. Now again, I've said this, you've heard this. I believe we're going to test the lows. I believe we're going to go into a recession this year, although everybody says there's no chance. Okay, very much like what Paulson said in September of 08, very much of what they've always said is you got nothing to worry about. And if you remember the movie The Firm, I get paid to be suspicious when I got nothing to be suspicious about. That's what I'm looking for. So we'll see. Again, I'm not going to jump into really the markets. Again, kind of churned. This week might end up the first losing week in a while, but certainly not by much. There is nothing really overly active about them. I think the Russell is still pretty strong. That's an indication that small companies are doing well, although small customer sentiment is not very good. Durable goods and manufacturing is not very good, but again, we continue to ignore that information because, of course, we want the market to go up. And the real question here, is it FOMO, the fear of missing out, driving this market? We've said this a couple of times. To me, this looks like a retail rally, okay? It looks to me that the big guys are sitting it out, letting the retailers buy and buy and buy and chase themselves up until they get to a certain point. And I think then you'll see, bam, and here will come the big money to start to short this market. And unfortunately, I think it'll go from FOMO to GMTFO, which is get me the out, okay? We'll see. Again, I'm not predicting. I'm staying with what I have, okay? And because I hedge, I can buy whenever I want. I do buy. I did buy CVS on the big dip down. I bought EA a couple of weeks on the big dip down. Why? Because I can hedge it, so I don't have to worry about it. But in the meantime, you've got gold broke out, okay, got right to our target. We missed by 20 cents. It got to 1349.80 before coming back down. I think you want to watch gold at about 1320, okay? That's an area that if you're not in, that I would be willing to enter now. The breakdown from 1350 was exactly perfect. I couldn't have written it any better. Oh, I did write it. I couldn't have scripted it any better. It worked exactly as we expected, okay? I think when you look at crude oil, obviously in crude oil, unfortunately, we've had some big swings in crude oil, in our own equity. And this could be that we're getting closer to have to thinking about maybe, hitting the puke button. 58 is the level that I'm watching. If it goes above 58, then I might have to say, you know what, I got to look for a better entry because it's certainly not acting the way I think it should be acting. I do think it's a little bit overdone by some of the retail trade there as well. But again, one thing we have to remember about the markets is we can't fight the tape action. Okay, the tape is the movement. We cannot fight that. Okay, if you fight it, you go broke. So the easiest way is sometimes you got to say, "Uncle, okay, enough," and move on. Okay, so that again, 58 we'll be watching, and I will give it out on the update when I decide, if I decide, of the old puke point. Now you saw what happened in bonds. We've been talking about bonds for a while, and we almost reached the puke point. Our puke point in bonds was 140 in the 30-year. Was 147.15. Well, now we're back down to 145.15. Okay, it got close, but no cigar, so we were able to survive that particular model. Now again, it happens, but you always have to make sure. Remember, you have to have an exit plan because we cannot focus and forecast long run. We have to say, okay, it's enough. I need to exit and take my losses. And move on. Okay, grains were, boy. Okay, now we've been bullish grains, and we've been a big fan of wheat. Wheat got absolutely throttled this week and broke down. Okay, so now on Wednesday, when wheat was getting hammered, we thought that it would be a spot to step in as a short-term buy at least. It did hold. It did rally back. Now, again, I think you have to be very careful on wheat because again, it did break down. So you have to now, again, we're not gonna change the charts that we look at to fit our opinion. I would like to be a buyer, okay? And I did buy lower, but again, I will not hold a permanent long-term position here right now because again, they have broken down. So I need to be on the sidelines looking for a new entry for a longer-term entry. I do think we're gonna rally, but again, I can't fight it. I mean, they can go to $4 first. So right now, wheat is broken down. corn and soybeans have held up perfectly, okay? And we're able to hold on to support, even though there were some scary moments, they were able to hold on to their support levels. So there's no reason for me to be concerned there. Of course, we're always concerned because they could break down. But at where they are and where they sit, not an issue. Okay. Cattle, live cattle or fat cattle, made a new high on Thursday, closed lower, a little bit of a key reversal, but it did come back down to support. The overall pattern looks really solid. We would continue to be and look to be buyers here. Feeder cattle continues in that consolidation range. Now, again, it's forming a symmetrical position, and look, it's going to make another big move, and we believe that move is going to be up. Now, we've been in this miserable consolidation point for about 3 months, okay, or longer. I believe it's going to check out and run to 147. Certainly, we're not sellers. We're only buyers in the meats in general. Okay. Now in hogs, as you know, we got forced out, and hogs continue to break down. Boy, did they get ugly. They went down limit on Tuesday and went through expanded limits on Wednesday to only be up limit on Thursday. So there's a lot of action there. So what does that look like? To me, that's bottoming action of where I'd want to be a potential buyer. And I did buy some on Thursday. Okay, actually, I bought some calls on Wednesday into the breakdown, and Thursday we had a rally, and we'll see. Again, I think that this might have shown a bottom, but again, we need to see some proof before we want to build a longer-term position. But certainly in the short run, I think it's in pretty good shape. The dollar tried to get through that 97 level again, came off a little bit, but still holding up at pretty solid support. So we're pretty comfortable in the dollar. And of course, we already mentioned the bonds are coming down, which is great and as expected. So we've been pretty in tune with the general markets, and I think it comes back to you got to be patient enough to wait for your opportunities, and I think that's something that is interesting. Now, one of the interesting takeaways I think I saw in the grain markets and in hogs, okay, to me it looks like a commercial seller. It looks like a commercial panic sell. It looks like either the insurance company or a bank kind of forced liquidation. Okay, that's when you see selling like you saw in wheat on Tuesday, Wednesday, okay, or you saw on hogs on Tuesday, Wednesday, that has all the appearance of forced liquidation. That is not the action of a normal market. So I'm going to assume that was a forced hand, which should immediately bring those markets back. You know, we go back a couple of years when this happened before with banks. They forced out people out of cattle. They took live cattle down to 97. Three weeks later, it was back to 110. So again, I expect the same kind of action here. I don't think that this is a tragic breakdown. I think this is really a buying opportunity to go for. And, you know, so I think we look at that, and there's been a lot of talk this week about the AT&T Time Warner merger. Okay, well, I want to know, who cares? Why do these cable companies, or why are they allowed to have monopolies? Okay, you know, I've been going through an issue. I've been trying to get my mom set up, and she hates Comcast, so she wanted to switch to AT&T. In her area, she's got her choice of one or the other. In my area, I can only have Comcast, so I'm kind of screwed. But in the meantime, okay, I set up appointments. They don't show. They don't care. Okay, and I'm just wondering, why do we, if they're so worried about Time Warner and AT&T, which is more of a lateral move, why don't they force these cable companies into other areas and not let one own one complete area? I think that is pretty much ridiculous from my opinion. I don't understand how we can let them get away with it, yet you hear all this wasted talk, wasted money, wasted time on, AT&T and Time Warner. Well, they might change the whole pricing model. Well, I think that's a bunch of garbage, and I think it's a joke. In the meantime, we're going to step out of here for a break, our final break, and come back with my commentary right here on Bubba's Bottom Line. Todd Bubba Horowitz. We'll be right back. Hey, all. Again, remember, you want to hear the webinars that I did, you can certainly reach, you can get the hedging or the futures. All you have to do is email me at bubba@bubbatrading.com. I will send them right out to you. And of course, if you need some promotional products, please reach out to my friend Joel Foreman at Elite Promotions. You can reach him at 847-702-8255. 8120. Certainly, again, good friend of mine. If you want to check him out, that's great. He's helping sponsor the show now, so we can put this out every week. In the meantime, check it out. And of course, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line. Welcome back, everybody. It is Bubba's Bottom Line. It is my commentary. And of course, who could it be about? Justin Smollett and his Nigerian friends, and how he set up this whole attack, okay, to attack President Trump and make America great again, okay? I'm sure I'll get the trolls out there talking about this whole thing, but are you kidding me? This guy deserves to go to jail. He deserves to go to jail for a long time, okay? This is ridiculous, and I think that those who immediately tweeted it out, Kamala Harris and Booker and the others, and the news that pounded on top of it right away and didn't check out their facts. It's amazing. It's no longer about the facts. It's about the hype and the story, which turned out to be a bull story, okay? I think this is one of the issues that we're dealing with when you have a media that is all on one side, okay? Now, again, we have to understand what's going on here, and this is not the America that we want, okay? Again, vote for either side you want, okay? But I think we need to rein in a lot of these politicians, with the amount of dollars they're making, and then they make a big deal because they want to go after President Trump. And I know many of you don't like Trump. Listen, I don't care, okay? I voted for him. I'm proud that I voted for him. I think he's doing a good job. And I could care less what you think about it, okay? That's why this is America. We have the right to our opinion. But at least when you're going to spit out news, at least make it factual news instead of a bunch of hype that you're spewing that you don't care about, okay? That you're just trying to make a headline, okay? At the end of the day, okay, both parties stink and they're broken, but you see a lot more of this left-handed media because that's what we got. And of course, that's what our new presidential candidates look like for the Democratic Party. They want to be more into the hype news and spread false news or fake news because they don't want to check out the story first. They want to be the first to hit that Twitter button. In the meantime, Smollett deserves to go to jail. I hope he does go to jail. And to me, it's a crime that we've turned into the things that we see happening right now, okay? So again, let's see what happens. Let's see how it plays out. In the meantime, have a great weekend, everybody. This is Bubba's Bottom Line. Todd Horowitz. We'll see you back here on Monday with Bubba's Daily Update from Las Vegas. Have a great weekend, everybody. Thanks so much. We'll see you later.